really excited to have this conversation today with all of you. I know it's maybe not the most exciting topic, but it is something that is very necessary, legally required, all of the above, and also can be a really good thing for your investors and kind of building your reputation in the market as you think about your current raise and future raises as well. So this is really supposed to be, an informative series where we help you learn about the importance of annual reports, dive into some interesting questions and thoughts around the annual report. And we're fortunate to be joined by Vince Mongio today, who is one of the leading CPA authorities in the industry. Always really enjoy chatting with him. He's got some great insights, and we're going to be able to dive into some additional topics today because he's here and can talk from kind of the financial side of things and the auditing side of things. So with that, before we get started, would love for Vince, if you could just give a little bit of background on yourself and your firm, and then we could hop into it.
My name is Vince. I'm the partner at Mongio & Associates, CPA firms. So, we are a traditional accounting firm in that we do the traditional services such as tax and bookkeeping, but we primarily focus on assurance services as it relates to different capital raise activities like crowdfunding, Reg A, A+, et cetera. So we've been in this space for about 6 years now. We work with all of the major platforms, Start Engine, Republic, WeFunder, and then we work with some of the smaller ones as well. And, our goal is to, make the financial compliance process as efficient and as painless as possible, up until the point the company files its Form C. So that's it in a nutshell.
Excellent. No, I appreciate that. And if any of you ever need kind of, the financial auditing accounting services for getting a Form C or Form 1A prep, I do highly recommend these folks. They're terrific to work with, and we've had a really good experience with many of our clients working with them. But Vince, just to kind of kick it off, for those who are joining today, let's dive into what is the CAR? What is Form CAR?
Yeah, absolutely. So the CAR is your annual report for any company that has conducted a crowdfunding offering. So after you filed your initial Form C, every issuer needs to file at least one annual report. And so what that annual report is, it's similar to your offering statement in that you have to, talk about how the company is done, management's discussion and analysis. And then you also have to submit your financial statements for the most recently closed fiscal year. So that is due 120 days after the close of your financial year. So for most, that's going to be April 30th of 2024. And the only difference between the offering documents as it relates to the financials is the financials this time don't need to be audited or reviewed. They can be what's called management certified. Now, with that being said, the financials do still need to be in accordance with US GAAP. So that means footnotes and disclosures, proper presentation in accordance with the SEC framework. So how this impacts you is you sort of have one or two options, right? The cheapest option is to go ahead and take care of it yourself. If you've worked with us in the past, we can sort of provide you our templates that we use to put together the financials, and you can sort of update them yourself. Or, we can work with you through a compilation engagement where we're not issuing a report on the accuracy of the financials. We're just saying that we help you put the financials together. So that's how the financial statements interplay with the Form CAR.
Got it. So yeah, for the majority of you, just to be really clear, your annual report will be due on April 29th of this year. And that will include those, new financials, so your investors can get a sense of how the business is progressing or how things are going overall. And then there's going to be some key update sections in the CAR as well. Again, all with this idea, really the whole creation of the CAR was this idea that we need to find ways to provide investors with more updates. And that's why the SEC requires it, is to provide those investors at least that once a year update. So that's the idea behind it, is to keep your investors in the know about how the business is fundamentally doing. So it really is important. And I will tell you, just from my own experience, just like a customer, right? A repeat customer is the best customer. We often find that the best investor is a repeat investor. I've had investors start by putting $1,000 into my business. and have gone on to invest $100,000 into my business. And the biggest reason they tell me why is because I continuously keep them up to date on how the business is doing, continually provide the annual reports, provide quarterly updates as well with a little bit less information, but keeping them in the know so they can see we're continuously executing against all the things we say we're going to do. And that really helps build your reputation and trust. So I do think there's a lot of value beyond just like getting this file form because you have to do it. It actually helps build trust in the market with your investors, and it is very much looked upon as a positive and a way for you to differentiate yourself from all those folks who don't do that. So anyway, that's just my 2 cents on it. Vince, would love to hop in. Can we talk about, in terms of the financials, since you do come from the CPA side of things, something we see people get confused about is they have no idea what GAAP financials means. What are GAAP financials? How does that kind of differ from maybe just, keeping your books?
Yeah, absolutely. So the acronym GAAP stands for Generally Accepted Accounting Principles. And so this framework is the required framework by the SEC for all companies that are, filing annual reports, right? So effectively, this means your financials need to be on the accrual basis of accounting, meaning revenues recognized when earned, not necessarily when cash is received, and expenses recognized when incurred, not necessarily when cash is paid. So that's the high level definition of accrual, but GAAP also encompasses a broad set of not just accounting principles, but disclosures, right? So there's specific disclosures that the company needs to make as it relates to its significant accounting policies, its general operations, related party transactions, subsequent events, debt, etc. And so, the guidance can be pretty granular and broad. That's why it's best to make sure that you either know or are familiar with the disclosure requirements, and if you're not, work with someone who is aware.
And do you know in like QuickBooks or Xero or any of the kind of key bookkeeping tools that I know a lot of folks use, do they have built-in kind of accrual accounting or not?
That's a good question. So the answer is yes, but mostly no. In QuickBooks and Xero, there is a toggle that you can select between cash and accrual. But the only thing that does is it considers the accounts payable and accounts receivable balances. If you're using accounts payable bills or accounts receivable invoices, then and those are your only cash to accrual adjustments, then yes, you can simply toggle between cash and accrual in QuickBooks and have accurate financials. However, for most companies, it's not that simple in that the accrual adjustments go far beyond just accounts payable and accounts receivable. There are perhaps some manual journal entries that need to be posted for, say, accrued interest, right? That's not something that QuickBooks can do. That's something that's going to be, sort of methodical and intentional on behalf of the issuer to calculate those interest amounts, et cetera. In addition to just general accruals that won't make it through accounts payable, such as loss contingencies, reserves for bad debt, reserves for sales allowances, reserves for obsolete inventory. You name it, the list goes on. And so a non-cash compensation for equity-based compensation. So there's quite a significant, pool of adjustments that, won't be, rectified just by clicking cash to accrual in QuickBooks.
Got it. One of the other things that I know is really important when kind of putting together your financial statements, if you are going to kind of just self-certify the statements that go into your annual report, is making sure that your statements kind of agree with your cap table, right? And the amount of money you've raised in the past year. Can you just talk a little bit about that?
Yeah, absolutely. So as part of our general review procedures and auditing procedures is to, compare the cap table to the financial statements, right? That's the basic procedure. So, if we see your cap table shows that you raised $1 million and we look at your equity section and you have, say $500,000, the question becomes, where was the remaining cash receipt accounted for? So it could mean that your cap table is inaccurate. or perhaps your financials are inaccurate. Something was recorded erroneously. And so we've seen, amounts recorded that should have been recorded to equity as sales, right? So in that case, revenue was overstated, equity was understated, companies pay tax on income that wasn't really income. So that basic procedure should be performed by company's management and financial reporting personnel to make sure that, A agrees to B.
Got it. No, that makes a ton of sense. And folks who are listening in, the annual report, it's due by April 29th. Now, if you don't provide the annual report by April 29th, can you continue to use Reg CF or Reg A plus, or are you actually not allowed to because you're not meeting compliance standards?
Yeah, so you're actually not allowed to. Once you're in default with your annual report filing requirements, you can't file an additional Form C. That's why it's very important to make sure that your annual report is filed. Now, keep in mind, like I mentioned, everyone needs to file at least one. It's not very burdensome, and I know your team at Raise Papers does a very efficient job at taking care of issuers as it relates to the legal filing piece, but financials, again, like I said, they're not going to be scrutinized as much as they were, during the initial filing. So I would definitely recommend doing it for the reasons that Chris mentioned, and on top of just being in compliance with SEC requirements, so that you can continue to crowdfund if you ever do decide to do that again. And once you're done with your first one, there is a good chance that you might not need to file one ever again. And that's because there's certain thresholds that if the company is under, they don't need to file additional annual reports. And so there's sort of two thresholds. There's the number of investors and assets that the company owns. So and pardon me if I'm mistaken here, you can look this up pretty easily. I believe it's if you're under 300 investors and 10 million in assets, I believe, you don't have to file an additional annual report, but you will need to file what's called a Form CTR, which is a termination of your annual report filing requirement. And you will then list the reasons why you don't have to file, and you'll say that the company doesn't have more than 300 investors, and it has less than XYZ dollar in assets.
Yep, and we're happy to help with the termination report as well. So once you file an annual report, you do have to file that termination report within a few days of it. Otherwise, you will have to do it again. But as long as if you file this year and then file the CTR, then you're good to go, and you don't have to continue to provide it until you do another Reg CF offering. And by the way, we do see almost 40% of companies who raise capital under CF do at least, another round of funding, if not more than that. So for many of you, even if you're thinking, oh, I don't think I'm going to do another Reg CF, you may very well end up at that place, in which case, again, you're going to need to make sure you're in compliance, and will have to do before you're allowed to list your raise on any platform. Taking another question here. So in terms of thinking about going back to kind of the financial statements, one of the things we get asked all the time is what key financial in addition to having to be kind of in GAAP, right, in good working order, what are the key financial statements that you have to provide to your investors?
Yeah, absolutely. So it's going to be the same set of financials that were required for the initial filing. That's going to be your balance sheet, your income statement, also known as profit and loss, statement of cash flows, and statement of changes in equity, along with the footnotes and disclosures that accompany those financial statements.
Got it. Okay. No, that's super helpful. And then if we could get a little bit technical for a moment, and then we'll go back to some more annual report stuff. For those of you who are on here who maybe are running a CPG company or something like that, where you actually have inventory, can you just talk a little bit about some of the fundamentals people should think about when thinking about how to count your inventory and reconcile your books to manage that inventory?
Yeah, absolutely. My partner Renee is on the line. He's actually with my name, but he has a different profile picture. So I'll let, that's his area of expertise. So I'll let him chime in there.
Absolutely. That is such an important question because, in starting a business, you get in and you start operating and you do everything that you need to do to get it, to make it successful. But not knowing the accounting implications becomes quite a bit of a headache on the back end, right? So some of the things that are truly important to make sure that that task is accomplished and can be reviewed and audited is making sure that you have counts at the end of the year, right? What are your inventory types? Are you counting them? Are you reconciling your books? How are you determining the cost of your inventory? Are you using a method that's in accordance with US GAAP? Would that be the cost method? Would that be an average cost method? Are you tracking that? Are you looking at, are you using FIFO or LIFO? You know, those types of accounting considerations are critically important. Also, if you're manufacturing, are you taking into consideration the direct labor, the overhead, right? Your production facility, what you're paying for rent, what you're paying for the utilities. You know, different aspects like that are very important, and they go into the cost of the products that you're producing and later selling. So you have to also recognize the cost of goods sold with cost of sales with each item that is sold. You know, one thing that we often see that is just overlooked is shipping. Cost of getting your raw materials to your production facility, that's also part of the cost of goods sold. So those are some of the items that, you know, we come across in what we do day in, day out that become an issue, right? Because now for regulation crowdfunding, you have to submit the last 2 years of financial statements. So oftentimes we find ourselves in a situation where we have to count today, present, and then roll that back to those periods, right? So what's truly important is making sure that you have proper production reports and proper inventory accounting ledgers. So making sure you're tracking that in detail. That's what will set you up for success in that area.
Thanks, Renee. One of the reasons why we're really leaning in and talking about the financial statements is when you work with raise papers to create your CAR, there's actually not a ton of work that you have to do. We try and remove as much work as possible. So what you're going to end up needing to do is providing a few business updates, answer some key questions around, you know, how things are improving in terms of getting to profitability, things like that in the document. But we try and minimize how many questions you have to answer and what you need to review from your prior Form C. So we try and make the process as simple as possible, as pulling as much information from your Form C as possible. So really, it's going to be key business updates, re-looking at the disclosures, making sure those haven't changed, and making your life as simple as possible, and then also the financials. So those are kind of the big components, is those business updates and the new financials, which is why I wanted to dive in on the financials. But we really do try and make the process as simple as possible. So anyway, just know that when you're getting into this process, it doesn't have to be hard. It shouldn't take a ton of time. We really do try and make it very, very easy. Our paralegal is going to go through and make sure everything's in a pretty good place before you get started. And then if you're feeling like you don't really want to navigate the waters of dealing with the financial statements, you certainly can hand it off to these guys as well. And Vince, if you don't mind, I'll just share your email in here if anyone wants to reach out to you so that they can work with you on their financial statements if they need any help.
Absolutely.
So I'll put that right here in the chat if anyone wants to reach out directly to them to take another thing off of your plate so your life is as simple as possible. One more thing, Vince, I'd love for you to just hit on from your perspective and experience. What are some of the kind of key best practices you've seen from founders who do a really good job of staying in touch with their investors, who file the annual report? What are some of the key things you see from them?
There is a lot of emphasis on the initial filing, being in compliance so that you can raise a bunch of money. But it's very important to return the same courtesy to your investors for the reasons that you mentioned, right? And that's why you were able to continue having reinvestments, right, from your original investors, because it shows that you care. It shows that, one, you care, and two, if you're doing very well, you know, subsequent to the initial round, then you definitely want to show that off. It only helps you on top of just being in compliance. So definitely, I'll definitely echo your sentiment as it relates to initial investors, the ease of attracting additional investments from them. And a way to sort of facilitate and nurture that relationship is to continue keeping them updated and abreast of new developments. And not only if you're doing very well, say revenue increases, et cetera, whatever the case may be. Let's say you're not doing too well. Let's say there was a reduction in revenue or whatever the case may be, or an increase in expenses. At least that's your time to be forthcoming with them and provide some context to the financial statements through the management's discussion and analysis. That way, the best way to get ahead of any potential conflict is to get ahead of it, right? Answer the question before it's asked.
100%. No, I couldn't agree more with you. I think that's exactly right. Being transparent goes a long way. And as a reiteration, it is an SEC requirement. So like not doing it, while we haven't seen any major issues yet, there is concern that eventually the SEC is going to clamp down on this and say, wait a second. But again, no platform will let you list if you don't do it. So at a bare minimum, there's that. But yeah, the best issuers do actually put in the work. I am also going to share a link here with all of you, and I'd love to open it up if anyone has any questions as we kind of wrap here in the next 10 minutes or so. I'm putting a link. So today only you can get the CAR full toolkit for $475 on Raise Papers instead of $575. So it's $100 off today. And hopefully you get an opportunity to take advantage of that. We really appreciate you attending today's webinar. But like we said, our goal here is to make this as affordable and easy and painless as possible. Just like taxes, no one wants to do them, but it's a good thing to do and you have to do it. So let's just get it done in the easiest, simplest way possible. Vince or Renee, any other last points on kind of the financial statements or anything you think people should know?
I would just say that sometimes during the compilation engagements where we're putting together the financials, there's sometimes confusion between the issuers and us in terms of what we're allowed to do. Even though we're not reviewing or auditing them, we still are prohibited from taking on sort of an accounting function. Well, not necessarily prohibited, it's just not part of the engagement, right? So if the accounting isn't up to speed, that definitely needs to be done before we can get started, at least a good faith effort. And during the compilation, we could perhaps recommend some adjustments. So simply put, when you're ready to get started and you're ready to reach out to us, make sure the company doesn't have 6 months of unreconciled bank transactions, make sure the bookkeeping is up to speed. And then once we have a solid foundation, we can get going with the compilation engagement.
Definitely. Thanks, Vince. Definitely make sure that your bank reconciliations are done in your accounting records. Any credit card accounts are reconciled as well. Those are just the most effective and simplest way to identify any gaps, any missing information, anything like that. I mean, it's one of the first things we do when we look at it. Also, just take a look at your financial statements. Do you have balances that are contrary to the type of account that they are, right? Do you have asset accounts with credit balances? Do you have liability accounts with debit balances? Those are really like the ones that stand out that you can easily identify and go back and reconcile and make sure that they're good to go.
Yeah, and luckily what I've personally found in doing my own books for a long while, and I now have a bookkeeper, but you don't have to overcomplicate it, right? It's like you look at your expenses on your credit card statements, you put them into the general categories that they are. I think a lot of people at this point use Stripe or Shopify or something like that for kind of recognizing your revenue. It's actually pretty easy. It's not overly burdensome in the way that I think some people worry about. So it doesn't have to be that complicated. Simple is better. At least get it done and make sure you have something to submit. As a reminder, April 29th is the due date to get in Form CARs. And that will preclude you from doing a new forms or a new Reg CF offering, as well as continuing the one that you have. And it doesn't look like we have any other questions. So if that's the case, we will wrap up here. We will also send you the links in an email in a follow-up after here, or you could just copy it out of the chat session. Really appreciate everyone being here. Vince and Renee, thank you so much as always for your time. Feel free to reach out to them with the email that we provided if you'd like their help. And please reach out anytime with any questions you have. Chris at raisepapers.com. And I believe my phone number is in my email as well. Feel free to call me if you have any questions at all. Thank you, everyone, very much.